So looking at our first theme, the U.S. economy, again, we continue to see the U.S. economy being very strong, continuing to expand, maybe not as rapidly as it did early in 2018 when the tax reform was first passed, but we are seeing some gaining momentum in the U.S. economy, and we think 2020 continues to grow. Looking at the first chart, you'll see that the estimates for 2020 are up close to 2% GDP growth. If there is a surprise, that may actually be on the upside if we get a resurgence in U.S. manufacturing and global manufacturing. One of the drivers of the economy is employment. The numbers are just amazing right now. We're seeing very, very low unemployment numbers, as this chart shows, running along the bottom of that number historically. We're also seeing very large numbers in labor participation rates, something we did not have over the last decade. And across really almost every level of income, we're seeing just wonderful increases in employment. And what's really good for the U.S. economy, we're seeing very large wage growth at the bottom levels of the income ladder. And that level of income, when that sees that growth, that goes right back into the economy when hardworking folks start to earn a little bit more money and they can put that right back in. That really helps the U.S. economy because we are a consumer-driven economy. As we'll see on this next slide, we also can see that the consumer's health is getting better and better, and that's helping drive their confidence levels. The first chart shows consumer net worth. Now, obviously, as the stock market grows, 401ks grow, housing values come back, all of these contribute to a higher net worth in the U.S. consumer. And what also helps on the next slide, what helps net worth? It's more assets and less debt. And so the debt service coverage ratio, which is income relative to the cost of debt, that's come down tremendously. So one way to give consumers a lot of confidence, increase their net worth, lower their debt ratio, and then we start to see more spending in the marketplace. The Fed is also helping. One of the big problems at the end of 2018 where we saw that big pullback is the Fed came out and said they were going to be very aggressive in fighting back inflation and raising interest rates. They obviously backed off of that in early 2019. They were very dovish this year. The market responded with some handsome returns. As we can see on this chart, the Fed funds rate is still well below the average real Fed funds rate, which is the Fed funds rate minus inflation. Okay, we're still well below the average Fed funds rate that occurs before a recession. This is probably one of the areas we watch most closely when we're looking at the economy and our expectation. Right now, the Fed's on hold. That may not stay that way all year, but for now, there's no indication the Fed wants to be aggressive. This is an important one. Money is flowing back into the U.S. Part of the Tax Reform Act was the ability for companies to bring literally over $1 trillion of funds that were outside in other countries and bring it back to the U.S. without a burdensome tax impact. And that funding is coming back. We've seen over $1 trillion of funds come back to the U.S., and that's why we're starting to see a resurgence in manufacturing startups here in the U.S. That money's coming back. It's going into capital spending. It's going into higher dividends, which again feeds into the U.S. economy. It's going into stock buybacks. And why it may be politically popular to say stock buybacks are not good, they are in fact good. They help the balance sheet of firms. That helps them grow their capacity to invest back into the economy. When stocks are up, they can make more investments. So all of this is positive. $1 trillion back into the U.S. obviously has a positive impact. One of the other big changes in the marketplace right now is we're seeing a reduction in U.S. government regulations. In fact, there was a survey done prior to this presidency, and one of the biggest concerns, it was actually number 2 to healthcare costs, was the amount of regulations in business. When a market is overregulated, business owners will pull back. They're a little hesitant. They're not sure how to handle that. As we see on this chart, there was a huge number of growth in regulations going into 2016, and that number has pulled back massively. This is the number of pages of regulations in the registry. And so we see a massive pullback in regulations that frees up confidence in small businesses, and that starts to expand our economy.